Hey guys, it's Joe Friday. I just wanted to do this quick video because I know some of the new members aren't familiar with my 14 RSI moving average. The guys that have been with me for a while know all about it already. I did a prior video. I can't seem to find it, so I'm just going to do a new one here real quick. Anyway, the bottom line is this 14 RSI moving average, at least that's what I call it, is really what's called a reverse engineering RSI. And what it does is it places the RSI on your chart on price as opposed to being down here. So you can change the parameters right here. I have it at it's an RSI 14. That's the length, just like this is, and the 50 is the level, the mid level. Now you can change that to any level you like. I leave it at 50 because that's the normal level. That's used on an indicator. I had to add it here because Silly Toss doesn't have an ability to add that, so I just put a price level in here and saved it. Otherwise, all you get is overbought and oversold. So, in any event, bottom line is that what this does is that when price is above this moving average, it means it is above the 50 mark on the RSI. And when it's below, it's below the 50 RSI. So the operating principle is that when you are above the 50 RSI, you lean bullish. And when you break below the 50 RSI moving average or 50 level on the RSI at the bottom, it's bearish. So I don't think there's any secret there. It just, let me put this price here for a minute. All right, sorry. It just saved me the bottom space here because I don't like to have my charts cluttered with too many things. I use the MACD as my preferred bottom indicator, and I just replace the RSI up here and I put it on price. And I really don't care if it's at 80 or 20. All I care is where price is in relation to it, in relation to the 50 level, which is the mid level on the RSI indicator. Now I have the RSI label up here that I put just if I want to take a look to see what number is it. But to be honest with you, I don't even use it that much. All I know is when we break above it, we break above that 14 RSI, that's bullish, and when we break below, it's bearish, and it acts as resistance, and it also acts as support. And same thing here, you can see it bouncing along this 50 level. So that's it. Simple, simple thing. Works on any time frame. This is a 5-minute. Now with the 5-minute, sometimes what I'll do is I'll use a RSI 7 or RSI 5, and you can change that on this indicator if you have it. If not, what you can do if you don't have this, reverse engineering on your platform, I don't think Swim has it. I don't know any other platforms that may have it. What you do is you can use a 30 exponential moving average instead. So if you'll see here, if I have it ready to go to show you, click 30 EMA, and it's basically the same thing. For the most part, it's off very slightly. So that'll tell you basically where price is in relation to the 50 RSI. Now, if you decide, well, I want to day trade this, so I want to use a, a quicker RSI, what I do is I also have a reverse engineering set at 5. So instead of 14, I have it 5. It's still 50, but I have it set at 5. And what that does is gives you a quicker and closer tell on the move. So you can see here it's hugging here on the 5-minute. It's hugging this 5 RSI moving average. And when it breaks, if I'm day trading and I'm short trading, that may be my sign to get out. But remember, really the key is you want to use these indicators in conjunction with price. So like here, for example, is a 5-minute chart, just real quick. Yeah, price broke above these moving averages, but remember, these indicators follow price. Price leads, not the indicators, right? So the key here, I guess my point is that price broke above this resistance, and therefore that's what led to the bullish move. And this it's just confirmed by the fact that it's broken above the indicator as well. So, and here's the other level it broke above. So if you wanted to wait for to swing high on this 5-minute chart, you would wait for it to break above there. Obviously, if you can get in a little early, you make a few more points because you're using the RSI instead. But the key is you want to wait for resistance or support to break, right? And then you can use this lower time frame or lower length RSI. And that, if you wanted to do that and you don't have this indicator, then you would just use a 10-period moving average, exponential moving average. So here is the RSI 5 and the RSI 14 moving average. It's basically a 30 EMA for the 14, and it's a 10 EMA for the RSI 5 moving average. So that's it basically in a nutshell. Works on any time frame. You can see here is the 1 hour. Again, you got to look for the break of support, and then it's breaking support and breaking the moving averages. So that's your sign. But just watch when the moving averages are going sideways because it's not telling you anything. That's just consolidation. So you get chopped up here. So you want to wait for an impulsive move down or impulsive move up. But that usually occurs on a break of above 50 RSI or a break below 50 RSI. So it's really really up to you on how you guys, what your preference is. So I just want to show it to you. This is the, I can go to the daily here. And you can see how it works on a daily. You can see the shorter time frame, just like a shorter moving average, kind of hugs the price a little closer. But the break really is of support, like it was here. That broke the moving average, the slower moving average, and then it broke the secondary moving average. And so that's when you knew that's when you wanted to go short, because you have all three checks checked off the box, right? And so here, this is YM. So if you go down to let's go down to a 4 hour, you can see it's breaking above or it's broken above both moving averages already, and it's still going sideways though, right? You can see sideways consolidation here. So once it gets above the range, then you may get an impulsive move up, and now you want to be on the right side of the trade. So you're above price, and you're above those moving averages. So I find it helpful. Some people just want to use moving averages. That's up to you. Some people use the 5 or the 10 or the 8 and the 4 or 14, 30, whatever it is they want to use. That's up to them. I like this because to me it just tells me where it is in where price is in relation to the 50 level on the RSI. And I always want to be above it if I'm bullish, and I always want to be below it if I'm bearish, depending obviously on the time frame that you're trading, right? So you look at the weekly, and you can see we're still below those moving averages, or just testing at least one of them. So, if you're trading the weekly chart, you're still going to be bearish here. If you're trading the daily, you're still bearish because you're still below it. But if you're trading the 1 hour, well, then you're bullish above, when you got the breakout. And then you just kind of figure out where you want to get out. So that's up to you and how you manage your trade. So anyway, that was my quick tutorial. Hope you found it helpful. Any questions, you guys could always email me. And hope you guys are having a good day.